Ba-dum, the geese are coming for me. Ba-dum, help. Welcome back to Strongman. Hopefully you can see them. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term Bogle investor. I'm author of the book, Stop Being a Broke Loser. It's on Amazon. And I'm going to work. Now, what are we going to talk about today, ladies and gentlemen? What are we going to talk about? Well, we're going to talk about rich people. Richies. Now, rich people, a lot of people assume that they're just amazing investors. I mean, they're rich, bro. That's how they got rich, by investing. No, well, number one, no. But I do taxes for people, okay? Some are middle class. Some are rich. Some are, I don't even know what you would call them. What is that? Oh, it's a school bus. I was like, you know what? So, rich people, you know, yada. Everybody worships rich people in the United States, which is fine, you know, as long as you actually built your fortune and, you know, actually provide goods and services to people. But if you inherited money, you're a loser. But, like I said, I do taxes for rich people. And it shocks me the amount of garbage investing that these people do, okay? Let's start off with the number one offender, simplicity. Now, just because you have a lot of money does not mean that you need to buy 100,000 different types of investments and stocks and crap, okay? No matter how much money you have, you can literally have one brokerage account with one IRA, unless you have a traditional and a Roth, and you could have one ETF, the VT ETF, or maybe two if you want bonds. You don't need 100,000 different ETFs or individual stocks, no matter how much money you have. VT works for everybody at all times of your life. Now, you may think I'm full of crap. Let me explain to you. VT is a one-stop shop. VT is the entire world. People think diversification is having like 20 different ETFs. No. If you have 20 different ETFs, you're probably just overlapping crap, and it's impossible to really understand what's in your freaking portfolio. I mean, if you have a lot of ETFs, do you really know what's in your freaking portfolio? No, you don't, because you might have a mid cap, and a small cap, and a large cap, and an international value, this and that and that. And your whole allocation is just a freaking mess, and it's just a pain to track. But with VT, you buy it, you own the entire world, you pay almost no fees, almost no taxes. Wow, that's so freaking hard. When you look at these rich people, oh my God, the amount of crap they have is unbelievable. Oh, this and that, and this and that, and this and that. Oh, I'm rich, yeah, I'm so rich. Where's my teeth, Thaddeus? Also, the second offense of rich people is they have financial advisors. Financial advisors. Now, being a CPA and actually working, like actually getting practical experience in the tax field, I think CPAs could just be financial advisors, okay? I don't see why freaking they have to hire an external financial advisor on top of the CPA and pay massive freaking fees to tell them what to buy. Because if you think about what a CPA does, we understand tax law, okay? I mean, as long as you had the experience. I'm not going to say I'm an expert in tax law. You know, I just started. But there's CPAs that have been doing this for 5, 10, 15, 20 years. And they understand how to manage, you know, trusts and estates, and they understand taxes, obviously, which is a big thing for rich people. Why do they need to get a freaking financial advisor on top of that? All a financial advisor does is just trade their stocks around and charge them an arm and a leg. I mean, I can actually see these people's brokerage statements. And like on the last page, there's usually the advisor fees. And they're paying thousands of dollars a year to this financial advisor. I don't know what they do. I don't know what they do for these people. But a CPA, I mean, as long as you understand, like, hey, buy an index. You can do people's taxes. You can plan. You can do like tax projections. You can plan everything. And then you can say, oh, by the way, for your investments, buy VT. I mean, is it really that hard? So I don't freaking get that. Okay. Number 3, the amount of tax inefficiency I see is mind-blowing. Now, even rich people like to have a lot of money in taxable accounts, which is fine. You know, sometimes you need money in a taxable account because you need to access the money before you can draw from tax advantage accounts. I have taxable investments, mostly a freaking index fund, well, all index funds, and then a little bit of stocks. And it's all in like VT. But these rich people, holy crap, I get their tax forms. And number 1, they're getting massive capital gains distributions because they're mostly invested in actively managed funds. When you invest in an actively managed fund, how it works is if the fund sells a stock at a gain, the fund doesn't pay the tax. No, the tax goes directly to you through your tax form, through capital gains distributions at the end of the year. The mutual fund itself is not a taxed entity. You are the person that is taxed. It's basically a flow-through entity. So if you invest in a freaking taxable fund and you're buying all these stupid mutual funds that are buying and selling stocks like crazy, you get these massive freaking tax bills. And if you're rich, oh my God, just the amount of tax you have to pay on all those distributions is freaking mind-blowing. Now, another thing that really pisses me off about some rich people is that they invest in what's called a publicly traded partnership. Now, a partnership is just basically 2 or more people working together. That's it. I mean, it's not a complex entity if you think about it on a fundamental level. If you're self-employed, like let's say my YouTube channel, it's a business. It is a business. I actually make money and have expenses. Thumbnail expenses. Internet expenses. But if you think about an individual, you are by yourself. And all the gains, losses, income, expenses are directly attributable to you. When you have 2 people, you have to actually have like a partnership agreement and you have to split that income and those expenses. And how it works is the partnership itself, 2 people working together, starting a business. Unless you're like a C Corp. But generally, most people in a partnership, the expenses, profits, and loss will not be taxed at the partnership level. That money will flow through and be taxed at your individual tax rates. That's how it works with a partnership usually. Now, there's these stupid things called publicly traded partnerships. And it's mostly with oil and gas and crap like that, natural resources. These things are massive partnerships with like, a couple general partners and then a bunch of limited partners, which is the investors. And at the end of every year, these stupid publicly traded partnerships, which it's a stock, basically. You buy a stock, but it's a partnership. They generate these tax forms called a K-1, which is your individual portion of the earnings, dividends, interest that gets taxed on your tax return. The partnership itself is not taxed. Let's say you own 5% of a partnership. Well, you get a K-1 and 5% of the interest that the partnership made, 5% of the dividends, 5% of the capital gains, 5% of the business's profit or loss, rental income, all that crap goes directly to you. Now, these freaking rich people, oh my God, they freaking have like a ton of, well, not all, I mean, some people obviously don't, but some people have a ton of these publicly traded partnerships. And I get these K-1s, and they're the most insane freaking things you can possibly imagine. There's like 50,000 different line items that you have to punch in. And it takes freaking forever. And if you have 3 of these things or 4 of K-1s, it takes hours. Well, not hours. It takes a long freaking time to put all this crap in. So by investing in this crap, because you think you're sophisticated and you're rich, you're just increasing your tax bill massively, okay? So if you're gonna invest in one of these stupid things, at least do it in a tax advantage account. But holy freaking crap, those partnerships, publicly traded partnerships, are trash. And even if you're not rich, be careful. Do not invest in one of those stupid things, because you'll buy a stock like Energy Partners or something like that, Sunoco. You get a freaking K, you'll get a K-1. even you, as a non-Richie Rich, you'll get a K1 and have fun putting that into your tax software. So Jesus freaking Christ. So in summary, just because somebody's rich doesn't mean they know what they're doing. Doesn't mean they have unique knowledge about investing. Simplicity is the key. No matter how much money I have, I'm going to be 95% VT. 95%. And, well, I need to consolidate my freaking accounts, I'll tell you that. Yes. But I'll be 95% VT and 5% individual stocks. The best way, have one brokerage, have one IRA at one place, and have all your stocks at one place. And it keeps your freaking taxes super easy. Because if you have a ton of different brokerages and you want a CPA to file your taxes, oh my God. Like, I'll get 10 different tax forms from 10 different brokerages, and I got to input each one, and I got to calculate all the gains and losses. It's just freaking nuts, okay? So keep it simple. No matter how much money you have, simplicity is the key. Yeah, actually, the more I think about it, the more I really think about it, I could be like a tax CPA, obviously. And I could also be, I could double as a financial advisor and probably make people way more money and charge way more money in fees. Because the way it all works now with these freaking rich people, it's insane, all right? Anyway, that's it. Another 13, 14-hour day ahead of me. But it's almost over. It's almost over. Anyway, that's it. Like, subscribe, tell your friends about me. Have a wonderful day. Cheers!